Hi guys, it's Stock Curry, and I am about to give you every single stock pick from the top 10 YouTubers. But first, let's do a quick market update. Now, tomorrow in the United States, the Fed chairman speaks. And I gotta tell you, it pretty much does not matter what the Fed says, the stock market's gonna go down. So I expect that tomorrow and probably on Wednesday as well, after the Fed speaks, we're gonna see the stock market go down. So why is that? Well, if you guys remember a couple of weeks ago, I told you that the Fed literally over the past 12 months doubled the amount of US currency that is in circulation. What that's going to do is that is going to double the inflation. So every single price on every single thing you buy is going to be double, right? So your food will be double, your mortgage will be double, your house will be double, your car will be double, your rent will be double. Literally every single thing you buy will double in price. Now, the Fed can't really allow that to happen right away because it will cripple the economy. So the Fed has to step in and they got to do something to slow down the rate of inflation. If they don't, we're going to end up in a hyperinflation state just like Germany was in after World War I, as Zimbabwe was in, as Venezuela was in, and we just cannot allow that to happen. It would be detrimental to the country. So the Fed has to step in and they got to slow down inflation. So how do they do that? Well, they do that by rising interest rates. When interest rates rise, what that does is it slows down the rate of borrowing. By slowing down the rate of borrowing, you're also slowing down the rate of spending. And that is going to slow down the rate of inflation. So the Fed has to step in. They have to raise rates. They have to slow down inflation. Here's the problem though. When you raise interest rates, not only does it slow down spending, but all of the growth stocks, the companies that rely upon debt in order to grow and get bigger, they're going to have a tougher time borrowing money because the cost to borrow is going to be higher, which means they're not going to be able to grow as fast. What that's going to do for your stocks is it means that your growth stocks are going to suffer. They're going to go down because they're not going to be able to borrow money as well. They're not going to be able to grow as fast. So that's a problem, right? That's why when the Fed speaks tomorrow, the stock market's probably going to go down. Now, let's talk about what this means for the economy as a whole. Now, the economy as a whole, it means we slow down the rate of inflation, which is good. But who benefits from rising interest rates? Well, banks do, right? Because as an interest rate rises, banks who actually do loans, they're going to make more money per loan. They're going to have a higher interest rate, which means they're going to make more money. So that includes not only all of your traditional banks like Bank of America, Morgan Stanley, JP Morgan, Goldman Sachs, but it also includes your newer banks, companies like Square and SoFi that do lending. So all of the entire banking sector is going to benefit from higher interest rates. Now, I still think growth stocks are beat down. I still think they're going to go up over the next few weeks. So we're probably going to take a little bit of a hit in the next 2 days. But after that, I think we're going to start going back up again. So here's what I am doing. Here's what Stock Curry is doing with his portfolio. For now, for the next 2 to 3 weeks, I am holding all of my high growth stocks, okay? I have call options, I have stocks. I'm holding them all for another 2 to 3 weeks. I'm going to wait for these to get back up a little bit more, back up to some levels of resistance. Some of the stocks I'm looking at about 20% upside. Some of the stocks I'm looking at about a 50% upside. But either way, I think there's a lot more upside on these high growth stocks over the next few weeks. Now, once the stocks hit my price targets, I'm going to close out my positions. I'm going to start selling off my call options. I'm going to start selling off my stock. I'll probably keep some in my long-term portfolio, but for the main part, for most of my short-term portfolio, I'm going to be selling. What am I going to do with all that cash? Well, I'm going to be funneling that cash into the banking sector. And I'm going to be buying both companies like Goldman Sachs, which is GS, JP Morgan Chase, which is JPM, Bank of America, BAC, Morgan Stanley, MS, companies like that. I'm also going to buy Square, SQ, as well as probably SoFi, which right now is, I think it's IPOE. So I just want to let you guys know that that is my plan, okay? That's what I plan on doing for the next couple of weeks. Obviously, you guys can take a different strategy. There's going to be a ton of growth opportunities in different segments and industries such as pharmaceuticals, and you're going to see quite a few of those today. They were up, we had some up 100% today, which is just crazy, incredible gains. There's going to be short squeeze opportunities. There's going to be all kinds of opportunities in the market outside of the banking sector. But I personally will be going heavy, a little bit over-invested in the banking sector, just due to the higher interest rates that are going to come over the next couple of years, so that I can rise that up while the rest of the market goes down. Of course, I'm still going to keep probably maybe 20% of my portfolio for some high growth plays that I find here and there. All right, guys, let's get into today's stock picks. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch one video each day, and you will get every single stock pick from the top 10 YouTubers. And all I ask in return is that you hit that like button, subscribe, and click the bell icon so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I'm not a financial advisor, and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. All right, let's get into today's stock picks. First up is AMC. This is AMC Movie Theaters. Stock Mo likes the fact that AMC was able to raise a lot of funds during the last run-up, and that they are reopening their theaters. He really likes AMC as a pandemic recovery play. Stock Mo thinks theaters are going to recover faster than a lot of other industries. And of course, Trace Trades is super excited about today's price action. He's been talking about this for weeks. Trace Trades said this is just the beginning of strong upward price movement on AMC. This is not the beginning of a short squeeze. In fact, according to Fintel, the number of shares available to borrow dropped by 2/3 today, meaning that the short interest actually increased on AMC. The reason the price went up so much today is because AMC broke through a strong level of resistance, which was $11. The next level of resistance is around $16.25. The hourly chart also finished with a bull flag, which points to a continued run-up in price on Tuesday. After Tuesday, though, the RSI will show oversold, and they think the shorts are going to take over and push the price back down to around $11. Also, there are now a ton of call options that are in the money, and that is going to force market makers to buy the shares and fill the call options that are going to get exercised on Friday after the market closes, which means AMC could rise significantly on Friday. Trace Trades also confirmed something that I've been thinking for a while now, and that is that he is all in on AMC. 99% of Trade's portfolio is in AMC. Now, I do not, and I repeat, I do not ever recommend somebody put all of their money into one stock. This is pure gambling. I'm honestly embarrassed that we even have Trace Trades on this channel, but you guys picked him, so we'll keep him for now. But if he doesn't diversify his portfolio by the end of this month, I'm going to drop him and allow you guys to replace him with someone else. Please do not gamble. Please do not YOLO. That is not what I teach on this channel. Next up is APHA. This is APHA, and they're an MMJ stock. They're doing a reverse merger with Tilray, ticker symbol TLRY. Richard Allen mentioned this as an arbitrage play. Under the reverse merger deal, APHA will convert into 0.8381 shares of TLRY. So if all were equal, APHA should be trading at 83.81% of the price of TLRY. If it trades less than that, then that is an arbitrage play, which basically means you were able to buy TLRY for less than it is currently trading at. As of the close Monday, APHA closed at $22.17, while TLRY closed at $30.47. 83.81% of $30.47 is $25.54. So APHA should be trading at $25.24, but it's not. It's only trading at $22.17. Which means you're basically buying TLRY at a $3.37 discount by buying APHA instead of TLRY. If you want to understand more about how arbitrage plays work, please go watch Richard Allen's video that he uploaded Monday morning. Just keep in mind that his video is based upon Friday's closing price, and APHA did close the gap quite a bit on Monday. Next up is CCIV. This is a SPAC, and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. The traveling trader said CCIV should continue to rise into the merger, and then it will most likely sell off after the merger, just like most SPACs do. After that, the traveling trader said there is no way CCIV stays at the $25 level once it is officially Lucid Motors. StockMo said he likes the fact that CCIV is up 23% over the past 5 days, and while he does think CCIV will continue going up, he does not think it will continue going up at the same pace it did this past week. Larry Jones also looked closer at the daily chart, and he sees how CCIV is hitting strong resistance at $30 a share. Once it breaks above that, our next level of resistance is at $35. And $35 is my short-term price target on CCIV. Once CCIV hits $35, I will be selling my call options. I will still be holding my shares though. Next up is CHEK. This is CHEK Cap. Richard Allen let us know that CHEK just received FDA IDE approval. The stock was up 100% today on that news. Richard Allen explained that this is not FDA approval to use their product. This is FDA approval for IDE, or Investigational Device Exemption, meaning that CHEK Cap can now start the next phase of their study on their C-scan product. If you are interested in learning more about what this FDA IDE approval is, please go watch Richard Allen's video that he uploaded Monday. Now looking at the chart, CHEK dropped in price throughout the entire day. I think people initially mistook this for full FDA approval, so I do think CHEK will continue to drop over the next few weeks as the hype dies down. In fact, it will probably close the gap back down to at least $2.42. So just be patient if you want to buy this stock. I do not think this would be a good swing trade, but it might be a good long-term hold. You just need to hold for a few years until it gets full FDA approval. Next up is DKNG. This is DraftKings, and they're an online sports betting company. StockMo acknowledged that DKNG got beat up today, but said he wasn't worried about it. DKNG continues to trade in its channel. I do expect DKNG to drop down to the bottom of its channel to around $64 before going back up again. ZipTrader agrees, saying that if you can get this in the low 60s, then DKNG is a great buy. Stocks that consistently trade within a well-defined channel make great swing trading stocks. Just buy at the bottom of the channel and then ride it up. When it hits the top of the channel, sell. Wait for it to get to the bottom of the channel again, then buy. You can do that with either shares or call options. Just don't play the downtrend on upward channels, because oftentimes the stock will trade flat in order to get back to the bottom of the channel. And that will kill your potential profits on either put options or the shares. So only play the uptrend on upward channels. The opposite is true with downward channels. On downward channels, never play the uptrend and only play the downtrend. Next up is FTFT. This is Future FinTech, and it looks like Chris Sain raised his price points to the ones I gave you yesterday. He said it's okay to buy FTFT at current prices so that you can get a position. I will remind you that yesterday I gave a buy-enter price of $6.50. It is now above that. So you can either try to buy on a dip, or you can just forget this play and move on to another one. I want to encourage you to never chase. When you chase, you end up buying at the top, and as soon as you buy, the price goes down. Then you panic and you sell at the bottom. And the second you sell, the price starts going back up. Everybody does this when they first start trading, so don't feel bad if I just described you. If this is you, then I encourage you to enroll in ZipTrader U. ZipTrader U will teach you when to buy and when to sell so that you can become profitable trading. If you want to learn how to trade profitably, I have a discount for 15% off ZipTrader U in the description of this video. Next up is GEVO. This is GEVO, and they're a renewable energy company. ZipTrader said if you can add money to GEVO before earnings, that is great. Earnings are on Wednesday after the market close. ZipTrader said that if GEVO goes down after earnings, then that will be an opportunity to buy even more. The average analyst price target on GEVO is $17, which represents a 72% upside from Monday's closing price. Next up is GME. This is GameStop. StockMo said he is not buying GME, but he's amazed by the price action and is just watching this as a fan of the market. He said he learned a long time ago to stay away from price action like this. His reasoning is because of the sell-off in January where GME dropped 90% in just a few days. In the same way that you can make a fortune on stocks like this, you can also lose a fortune. Next up is JMIA. This is JMIA, and they're an African e-commerce company similar to Amazon. ZipTrader said that even at current prices, JMIA is a good deal. He reiterated his $85 to $90 price target on JMIA, which by the way represents a 75% upside from Monday's closing price. Next up is LMND. This is Lemonade, and they're an American insurance company. ZipTrader said LMND is another stock that is undervalued. He said establishing a position now makes sense, and he has a price target of $170, which represents a 55% upside from Monday's closing price. Next up is LOW. This is Lowe's, and they're a hardware store. StockMo recommends LOW as a stock that can outperform the market without all the crazy ups and downs that high-growth stocks go through. He thinks people are going to use their stimulus checks for home improvements and that LOW will profit from that. The average analyst price target is $199.67, which represents a 15% upside from Monday's closing price. StockMo gave a $220 year-end price target, which represents a 26% upside from Monday's closing price. Technically, I like how LOW has been in consolidation for the past 7 months, but if you look at the monthly chart, I think LOW is still too high, and I personally would not be comfortable buying it until it drops back down to the bottom of its long-term trend line at around $120. Next up is Macy's. Chris Sain reiterated his $20 price target on If you played with Chris Sain, you should have sold today and taken profits. Next up is MITC. This is MITC, and this is the first lab-grown meat company listed on Wall Street. This just IPO'd on Friday. Dead Inside reviewed MITC today. MITC was founded by the Chief Technology Officer of Nano Dimension, ticker symbol NNDM. Dead Inside said they are trying to solve the problem of limited water supply, global warming, and limited land resources. Basically, they are trying to use stem cells to cultivate just the meat from an animal and then use that as a sort of ink for their 3D printers. Once printed, the meat sits in an incubator for a few weeks and turns into a fully formed steak. The key is that this is real meat. It's not a plant-based protein. Now, this is a very early stage company, and they are going to have a lot of hurdles to overcome. This is still in the R&D stage, so this is a very risky stock. But if you are interested in this company, I recommend watching Dead Inside's video that he uploaded Monday. Next up is NGA. This is a SPAC, and they're merging with Lion Electric. Lion Electric is an EV bus manufacturer. The traveling trader likes NGA because it still has a 71% upside back to all-time highs. That said, the traveling trader is not super bullish on this stock. He recommends selling a cash-secured put to lower your cost basis, or just buying the stock and holding long-term while also selling covered calls. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. The traveling trader let us know that NIO just received a $60 price target from another 5-star rated analyst. The MACD is bullish, but the RSI is starting to fall again. The traveling trader recommends selling covered calls on your NIO shares to increase your profits. Larry Jones also recommends buying NIO because it has been beat down so much lately. Since NIO is a long-term hold, you might want to buy a dollar amount rather than a share amount on NIO, as well as other stocks. You can do that with fractional shares. Fractional shares make it very easy to do long-term investing because you just have to buy a dollar amount and you don't have to worry about trying to calculate how many shares you need to buy, and you don't have to worry about not being able to afford expensive stocks. For example, in my long-term portfolio, I dollar cost average into positions $50 at a time. So with fractional shares, I'm able to buy $50 of each stock at set intervals, and I don't have to worry about what the actual price of the stock is. Now, Webull does not offer fractional shares, but SoFi does. That's why I use SoFi for my long-term investment account. By the way, I have 6 investment accounts, including long-term, short-term, Roth IRA, and even HSA, and I have those split up across 3 different brokers. So as you can see, I take full advantage of the different benefits for the different brokers. I use SoFi for long-term investing because I can buy fractional shares on SoFi. I use Webull for short-term trading because it is by far the best trading platform I've found. And I use TD Ameritrade to buy and sell OTC penny stocks. So as you can see, there are benefits to having multiple brokers. If you want to open an account with any of those, use my links in the description of this video and get yourself some free stocks. Next up is NNOX. This is NanoX Imaging. They're a new X-ray manufacturer that significantly reduces costs compared to current X-ray technology. Keenan Grace reminded us of this stock today. This company is just waiting on FDA approval. This technology could completely disrupt the medical industry when it comes to X-ray imaging. The average analyst price target is $67, which represents a 33% upside from Monday's closing price. technically, the MACD is just confirmed bullishness, the RSI continues to rise, and the EMAs look good as well. So everything points to NNOX continuing to go up. I like the $65 price target because NNOX has strong resistance at $66. Keen and Grace gave a buy-in price of $51 and an ideal buy-in price of $42. But personally, I just don't see the stock going down anytime soon. So I think if you want to buy NNOX, now is the time to buy. Now, Keen and Grace recommends setting a trailing stop loss in NNOX for 10%. That is the only thing, and I mean the only thing, that I do not like about Webull. In Webull, you can only set a trailing stop loss for the day. You can't set one for GTC or good till canceled, which means you have to enter a new trailing stop loss every day. I will let you know that Webull is working to add a GTC's trailing stop loss to the platform, but their developers haven't added it yet. In the meantime, while we wait for that feature to get added, you can set a regular stop limit and just update it every few days. Next up is OSK. This is Oshkosh, and they're a military and commercial specialty vehicle manufacturer, including electric vehicles. This is the company that won the USPS contract that Workhorse lost. The Traveling Trader said that Oshkosh's new business vertical puts them at a competitive advantage, and they are sure to get more contracts now that they won the USPS contract. If you like this company, the Traveling Trader recommends dollar cost averaging in. Next up is PENN. This is PENN National Gaming. They're an online and brick-and-mortar gambling company. StockMo let us know that PENN will be included in the S&P 500 on March 22nd. It continues to rise going into inclusion in the same way that Tesla did. StockMo gave a $150 price target going into the inclusion. Just make sure you sell right before inclusion. This is a buy the hype, sell the news play. Next up is PLUG. This is Plug Power, and they're a hydrogen fuel cell manufacturer. The Traveling Trader showed us that PLUG has been trading in a set channel for the past 6 months. It broke above the channel in January, but has since come back down. When you have a clearly defined channel like this, you can easily swing trade it. The key is to buy PLUG when it gets near the bottom of the channel and then sell it when it gets to the top of the channel. Right now it's near the bottom of the channel, so you can either buy the stock or buy a call option. Just make sure you sell when it gets to the top of the channel. Next up is RBLX. This is Roblox, and they're an online gaming platform. StockMo bought RBLX today in his YouTuber stock picks portfolio. I will remind you that StockMo's YouTuber stock picks portfolio is chosen by his viewers and is not necessarily StockMo's stock pick. Next up is RSI. This is Rush Street Interactive. They're a gambling company. StockMo just wanted to get this on your radar in addition to PENN and DKNG. The average analyst price target is $24.75, which represents a 23% upside from Monday's closing price. Next up is SQ, Square. Keen and Grace let us know about an article that came out yesterday that talked about the multiple catalysts that could propel Square forward in the coming years. They talked about Cash App and how Square grew Cash App's customer base by 50% and its gross profits by 70% over the past year. Keen and Grace gave a buy-in price of $240 and an ideal buy-in price of $225. But like so many stocks we're reviewing today, the MACD just confirmed bullishness, and the RSI is bullish and the EMAs are bullish. So I do not see SQ dropping anytime soon. If you want to buy SQ, the time is now. Next up is THCB. This is a SPAC, and they're merging with Microvast. Microvast is a commercial EV battery manufacturer. The Traveling Trader let us know that Microvast is working with Oshkosh to help them with their batteries for their EV buses. Oshkosh also invested in Microvast and now owns about 5% of the company. All of that said, the Traveling Trader warned that this is still a highly speculative company, even though it still has a 61% upside to get back to all-time highs. The MACD, RSI, and EMAs are all bullish, but the Traveling Trader still recommends setting a stop loss at around the 200-day EMA at around $13.80. Personally, I think if THCB drops below the 100-day EMA, then it's going to drop all the way down to the 200-day EMA. And the 200-day EMA would be a rebuy price. So I'm going to recommend setting a stop loss at $15. And if you get stopped out, try to rebuy it around the 200-day EMA at around $13.50. This is the strategy that I used on NNDM. On NNDM, I got stopped out of the 21-day EMA, the 50-day EMA, and the 100-day EMA. I was finally able to hold on to my shares at around $7 around the 200-day EMA, and now I am up 63% on NNDM in less than 2 weeks. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. The traveling trader thinks TSLA has hit a temporary ceiling. He thinks TSLA will have a difficult time getting above $900 until they can capitalize on some of their other business lines, such as solar roofing and autonomous driving. The reason is because other manufacturers such as GM are starting to take electric vehicle market share away from TSLA. Larry Jones also has a $900 price target on TSLA. Now short term, the MACD is turning bullish and the RSI is rising, so I do see TSLA continuing to go up for a little while. Okay, finally we have ZYNE. This is ZYNE Pharmaceutical, and they're a pharmaceutical company. Keenan Grace nailed this one. It was up 50% today. The crazy thing is that ZYNE gained all of that in the last 15 minutes of the day. Now it's sold back down to $5.90 in the after hours. So if you had been watching the stock and you had bought at pretty much any point during the day, you could have seen that it was selling off after hours and you could have sold after the market closed. But you can't do that if you don't have access to after hours trading. So if you don't have access to after hours trading, then sign up for Webull so that you can take advantage of the full trading day. With Webull, you can trade from 4 a.m. until 8 p.m. Eastern Standard Time. And right now, if you sign up for Webull using my link in the description below and deposit just $100, you'll get 2 free stocks worth up to $1,850. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, sign up for Webull or SoFi using my links in the description below. When you sign up, they're going to give you some free stocks. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.